Good day, everyone, and welcome to the Blucora First Quarter Earnings Results Conference Call. This call is being recorded. With us today from the company is the President and Chief Executive Officer, Bill Ruckelshaus, Chief Financial Officer, Eric Emmons, and the Senior Director of Investor Relations, Stacey Ibarra. At this time, I would like to turn the call over to Stacey Ibarra. Please go ahead, ma'am.
Good afternoon, and welcome to Blucora's First Quarter 2013 Earnings Conference Call. Before we begin, I'd like to remind you that during the course of this call, Blucora representatives will make forward-looking statements, including but not limited to statements regarding Blucora's expectations about its products and services, outlook for the future of our business and growth initiatives, and anticipated financial performance for second quarter 2013 and tax season. Other statements that refer to our beliefs, plans, expectations, or intentions, which may be made in response to questions, are also forward-looking statements for purposes of the safe harbor provided by the Private Securities Litigation Reform Act. Because these statements pertain to future events, they are subject to various risks and uncertainties, and actual results could differ materially from our current expectations and beliefs. Factors that could cause or contribute to such differences include, but are not limited to, the risks and other factors discussed in Blucora's most recent annual report on Form 10-K on file with the Securities and Exchange Commission. Blucora assumes no obligation to update any forward-looking statement, which speak only as of the date the statement is made. In addition, during this call, our management will discuss GAAP and non-GAAP financial measures. In the press release, which has been posted on our website and filed with the SEC on Form 8-K, we present GAAP and non-GAAP results, along with reconciliation tables and the reasons for our presentation of non-GAAP information. We have also provided supplemental financial information to our results in the investor section of our corporate website at www.blucora.com and filed with the SEC on Form 8-K. Now I'll turn the call over to Bill Ruckelshaus. Following his comments, Eric Emmons will review the first quarter results and second quarter outlook. Then we'll open up to your questions.
Thanks, Stacey, and good afternoon, everyone. I'm pleased to report that Blucora had a great start to the year with strong performance in both of our operating businesses. Revenue was $165.3 million, up 43% over Q1 2012, driven by solid growth in search and reflecting a full quarter of the TaxAct business that we acquired in January last year. Adjusted EBITDA was $45.9 million, up 45% year-on-year. Results this period underscore our practical approach to building value at Blucora, growing profitable operating businesses, cost and capital discipline, and efficient cash conversion. I'll begin with some comments on the performance at TaxAct. It was a hectic tax season, beginning with the late passage of the American Taxpayer Relief Act. Despite the noise, TaxAct performed well, gained share, and executed. For the 6 months through June this year, we expect pro forma segment revenue to grow approximately 9%, and segment income to grow 7 to 8% over the same period last year. These results are supported by 8% growth in consumer DDIY e-file. Through Tax Day +1, TaxAct generated 5.3 million consumer e-files, outpacing DDIY category growth of approximately 4%, according to IRS statistics through April 19th. On the paid preparer side, we grew equivalent e-file units 10.3% over the prior season and gained share in the assisted channel. Overall, TaxAct processed 6.5 million e-files in the season, up 8% over last year. TaxAct's performance reflects our participation in the growing DDIY market, the strength of our product, and our competitive price position relative to other solutions. As I mentioned on our call in February, we entered this tax season having made off-season investments in 4 key areas: instrumentation and business intelligence to improve filer retention and acquisition, core product enhancements to simplify the tax preparation experience, tablet and mobile product introductions, and additional offerings around basic tax prep to bring more value to our filers. In our core product, we enhanced TaxAct site content with tailored new information for taxpayers and more subject-specific guides. We improved the search capabilities in our Answers Center to more quickly provide customers with relevant support. We added chat functionality to our support platform to address frequent customer needs and improve response times in our call center. In mobile, we focused initiatives around an Access Anywhere strategy. We updated our Tax Act Central mobile app with enhanced features and functionality and introduced two new products, DocVault, a mobile app for organizing and saving tax documents, and our award-winning tablet app that allows users to start their returns on their tablet or on the web at taxact.com and access their information in either location, anytime, anywhere, using the same username and password. The Access Anywhere approach is working as our mobile initiatives drove new customers to TaxAct this season. Mobile is not material to our results today, but the trend is clear and we are excited by the opportunity as the digital lives of our filers continue to migrate to smartphones and tablets. On the new offerings front, we introduced Tax Audit Defense with year-round protection for filer tax returns and Legal Act Will for last will and testaments in 4 easy steps. We also partnered with PayPower to evolve our stored value card product with the PayPower Visa prepaid card. Together, these efforts, core product enhancements, mobile innovation, and new offerings surrounding and complementing the tax filing experience, brought more value to filers this season, built loyalty, and improved our following. Importantly, we also redoubled our commitment this season to price leadership in DDIY, where TaxAct is significantly more price competitive than other large players in the space. We view our price position as the critical second plank in bringing value to filers, along with delivering a great, accessible tax product. With TaxAct, everybody can prepare, e-file, and print their federal returns for free, regardless of AGI or filing type. Our price lock guarantee allows filers who start early in the season with TaxAct to finish on their own schedule and not be subjected to a late season fee increase. Our offerings, in addition to basic tax, including support, state filing, data archive services, bank products, and now legal and audit, are all competitively priced so the filers take home more of their refunds and don't overpay. Product investment and innovation and price leadership define the TaxAct value proposition, and the results this season speak to both our market position and the execution strengths of our team. We continue to like the DDIY trends and our outlook. Demographics are shifting to young, tech-savvy filers. Software and mobile advancements are strengthening DDIY solutions. Large, growing ad budgets continue to evangelize the DDIY category. As the price leader in the space, TaxAct benefits disproportionately from these continued trends. Turning now to our search business. InfoSpace performed well in the quarter, driven by growth in both distribution and our owned and operated properties. As discussed on our last call, we implemented changes in Q1 with Google that impact our distribution partners that acquire end users through downloadable applications, a group that historically and currently represents less than 50% of total InfoSpace revenue. We continue to believe these changes, while introducing transitions and tough comparisons for us this year, are long-term positive for the market and for InfoSpace. The InfoSpace meta-search model allows us to leverage content and features of the big engines to offer enhanced search services across owned and operated properties and our network of partners. The search market continues to grow. We have strong relationships with Google and the other major engines, and we are confident InfoSpace has ample room to innovate in both desktop and mobile search for years to come. Before I turn the call over to Eric, I want to make a few comments on our capital strategy at Blucora. We continue to focus on acquisitions as a way to build value. We recently issued $201 million of convertible notes to provide additional financial flexibility as we evaluate opportunities. The additional cash better positions us in pursuing larger deals, with sourcing, with speed, and with credibility. Looking ahead, we will continue to pursue investment and growth strategies at InfoSpace and TaxAct, while simultaneously looking for opportunities to add to the Blucora group of businesses. Transaction opportunities may come for us in the form of companies or assets that complement our existing businesses, or they may represent new lines of business unrelated to InfoSpace or TaxAct, where we feel we can be successful and the return opportunities are compelling. With that, I'll turn the call over to Eric for more details on the financials.
Thanks, Bill. Let's jump right into the results for the first quarter of 2013. First quarter consolidated revenue was $165.3 million, an adjusted EBITDA was $45.9 million. Non-GAAP net income was $42 million, or 95 cents per diluted share, and GAAP net income was $23.6 million, or 53 cents per diluted share. Bill touched on our strong consolidated performance in his comments. Therefore, I will focus on the year-on-year growth drivers in my discussion of the segment results, including pro forma results for the tax preparation segment. Before we turn to the segment results, let's touch on the strength of our balance sheet. As Bill mentioned, we successfully completed a convertible note offering which added approximately $195 million in cash net of fees. As such, we finished the quarter with cash and cash equivalents and short-term investments of $401.7 million, and debt of $275.7 million, or net cash of $126 million. Net cash is up $38.1 million from the prior quarter, highlighting the strong cash flow generation of the business. It is worth calling out that the debt balance of $275.7 million represents total principal owed and differs from the debt balance on the face of the balance sheet, which are presented net of discounts. Lastly, during the quarter, we repurchased approximately 68,000 shares of our stock at an average price of $15.48 per share. Now for our segment performance. Search had another strong quarter, generating $100.6 million in revenue and $18.3 million of segment income, up 34% and 37% respectively from prior years. Search performance was driven by revenue generated by our distribution partners, which was up $22.7 million, or 35% versus the first quarter 2012. Revenue from new distribution partners launched in 2013 represented $1.2 million, down from $1.7 million last year, but still off to a promising start. Segment income margin came in at 18.2% for the quarter, comparable to the prior year. Turning to the tax preparation segment. First quarter revenue was $64.7 million, and segment income was $30.8 million, for segment income margin of approximately 48%. As a reminder, we acquired the TaxAct business on January 31st, 2012, so year-over-year trends are most meaningful on a pro forma basis. Pro forma information is included in our supplemental information release available on our investor relations website. On a pro forma basis, first quarter revenue was $65.4 million, up 6% versus prior year, and segment income was $31.4 million, up 3%. The revenue increase was primarily driven by increased accepted consumer e-file volumes, which were up 6% through March 31st. Segment income growth lagged revenue growth due to the front-end nature of our tax season marketing spend. Segment margin decreased approximately 130 basis points, reflecting increased headcount investment. Since we are through the tax year 2012 filing deadline, let me provide some additional color on our consumer unit performance and how we expect it to translate to financial performance on a pro forma basis. Through tax day plus one, TaxAct consumer accepted e-files were 5.3 million, up 8% versus prior year, and well ahead of the IRS self-prepared e-file growth of approximately 12%. On a pro forma basis, we expect we will grow revenue year over year by approximately 9% for the first half of 2013 versus the first half of 2012. We are pleased with this growth, which was fueled by our gain in market share and revenue per filer gains. For the same period, we expect segment income will grow 7 to 8%. Moving to corporate expenses. Unallocated operating expense for the first quarter was $3.2 million, down 16% from the prior year, which included acquisition costs related to TaxAct. Let's spend a few minutes talking through our second quarter expectations for each segment. Starting with the search segment, we expect second quarter year-on-year revenue growth in the low to mid-teens, or $90 to $94 million, and segment income margin of 17 to 18%. This is consistent with our comments from our last call, where we expected the second quarter to be down sequentially given full quarter's impact of new implementations with our downloadable applications partners. For the full year, we expect to achieve revenue growth in our search segment of approximately 10% and segment income growth in the low single digits, consistent with our comments from our last call. Closing on search, I would like to reiterate Bill's comments that the changes this year, while presenting some headwinds to our results, are good for users and good for our business long term. As such, we expect to continue to invest in our search business where we see opportunities for growth. For the tax preparation segment, we expect second quarter revenue to be between $23 and $23.5 million and segment income margin of 63 to 64%. This represents a tightening of the previously provided first half of the year guidance expectations due to the visibility we have through tax season. We expect unallocated operating expenses to be flat to slightly down on a sequential basis. On a consolidated basis for the second quarter 2013, we expect revenue between $113 and $117.5 million, adjusted EBITDA between $27 and $28.5 million, non-GAAP net income of $22 to $23.5 million, or 52 51 to 55 cents per diluted share. GAAP net income of 9 to 10 million, or 21 cents to 23 cents per diluted share. Please note that our GAAP net income and EPS guidance does not include an expectation for non-cash gains or losses related to mark-to-market derivative instruments. Also note that the impact of such gains or losses are excluded from our non-GAAP financial measures. Lastly, our diluted EPS guidance reflects our expectation that shareholder approval will be obtained in the second quarter, allowing flexible settlement on our convertible notes. Currently, these notes are only permitted to be settled in shares. As a result, the first quarter weighted average diluted share count included an additional 1.7 million shares. With that, I will turn the call over to the operator, and we will be happy to take your